Veerappan, the CFO of JK Paper, to discuss the earnings that came through for Q4. We saw 28% growth in revenue and a 44% EBITDA. The numbers were better than what was estimated as well. So thank you very much for joining us today, sir, and thanks for taking us through all of the numbers. First, if I can just start with your guidance, because I do know that you've guided for 7,000 crores in terms of revenue for FY24. But if I look at the FY23 numbers, this is just around an 8-9% kind of increase. Is that a bit of a conservative guidance? Do you think you would revise it up now?
No, thank you, Pavitra. First, let me talk about this year. This year has been an exceptional year for us, and if I just had 2-3 things which has happened this year significantly is one, the investment what we have done in packaging board and soda unit. The ramp up of production has come out very well, and they have already reached 96% utilization by end of March. And Sirpur has been a good turnaround story. The capacity utilization is about 90%. And last year we had also acquired the #1 player in the corrugated packaging industry. So the year has been very good for us. And most importantly, the market conditions throughout the year have been very favorable. So the price realizations have been at peak. So this year is an exceptional year. So expecting the same price levels to continue may not be fair. And that's why the guidance in terms of whatever 7,000 crore have factors in this price volatility going forward.
What about, sir, on the margins? Because I was reading, just last month, people were saying that pulp prices are expected to ease because new pulp capacity is being added in countries like Brazil, Uruguay, China. In India as well, imports are now cheaper. So could you give us an indication of, margins? Where would they stand next year? What would be the key drivers?
Yeah, pulp prices coming down. If you are aware that we are backwardly integrated pulp, when the pulp price goes up, it's actually an advantageous situation for us. And when the pulp price goes down, it put pressure on the paper price also. The import price put pressure, and relatively it both. Then as a result, even the domestic prices come under pressure. So the margin will be under pressure. There is a threat of imports going forward. And this price volatility, because the pulp price was at the peak sometime in August 22. It was at $950. And right now it has come down to $500 a level. So that's something we have to wait and watch, this volatility. And it will have some pressure on the margin.
So any guidance, sir, on margins?
It'll be very difficult to pinpoint a number at this point of time. We'll have to wait and see, because this volatility and even, for example, even in the packaging board segment, we do see some sort of a slowdown in FMCG and pharma sector. So that is again putting some pressure on the pricing. It's volatility, but we at the same time, some of the coal prices and other prices are coming down. So our endeavor will be to maintain and protect, but it's very difficult to say at this point of time. There will be some drop.
So can we at least get a sense, Mr. Veerappan, whether, the bulk of this year, your margins were above 30%, between the 30 and 34, 35% range. It's the fourth quarter where things dipped quite a bit. Would it be fair to say that you can... So I'm just trying to get an outlook for the year. Will you be able to maintain ballpark around the 30% handle, or will they probably be below 30%?
It will be below 30%, but it's too early. Having said that, it's too early to say, and we need to see quarter on quarter how the price moves, and accordingly we need to place our actions. Our endeavor will be to maintain it, but it will be fair to say at this point of time it will be below 30.
Okay, so just a question. I mean, you earlier also mentioned that you're anticipating some slowdown on the packaging side from FMCG, for instance. Give us an idea, an outlook on volumes as well across different product segments. How has the year started off so far in the first quarter? What's your volume expectation?
So as far as uncoated paper is concerned, it remains stable as of now, and we're able to retain the volume and the price levels. But as far as the packaging board is concerned, yes, there has been a pressure, and it remains tight. The slowdown in the pharma and FMCG sector and other application industries is impacting. But we believe it's a temporary phenomenon. And even in this, we have started the quarter also not in a very positive note as far as the demand for packaging board is concerned. But we believe it's a temporary, and we need to wait and watch.
Mr. Veerappan, how much does this contribute to your overall revenues? Just the packaging board segment, how much does it contribute now?
Packaging
and you also have a new...
Yeah, overall, we would say it will be 37 to 40% next year we are targeting.
What's the capacity utilization you're operating at?
Packaging board, I mentioned in my initial remarks that in March, it has already come to 96%.
Okay, so would you look to add capacity over the next 2 to 3 years? Could you give us some long-term projections? What's the goal that you have for JK Papers?
Okay, let me tell you, if the last 3-4 years and 5 years, there have been significant investments done by JK Paper. One, right from starting from the acquisition of Sipur, and then investing in the packaging board line in Songad unit. And we have also invested heavily in the corrugated. We have also invested in our organic plant in Ludhiana for corrugated packaging, and the inorganic acquisition of the number one leader in corrugated packaging. So we have been doing a lot of investments, and in this industry, we need to see any such investments. We need to see the next 18 to 24 months. We'll have to stabilize, learn the business, stabilize, and try to get returns before thinking of the next investment. And even this sort of investments does take to conceptualize, and any organic thing, it does take 18 months to 24 months to really put in place the entire thing. So at this point of time, the objective will be to just get the returns of whatever we have invested so far.
Okay. So, again, going back to the overall picture for the new year, if I have the numbers correct, I think FY23, you did a top line of just under 6,500, 6,400 to be. Yeah.
Yeah, the consolidated gross revenue is 6,772.
Okay. So, looking ahead at FY24, given the trends that you described, 5%, 10% growth, more than that, can you give us some ballpark range?
I think we mentioned that we'll stick to the guidelines. We'll be over 7,000 crore, definitely, despite all the price reductions and all that.
So,
over 7,000 crore should be,
7,000 crores of consolidated top line?
Yes. More than that.
Okay. Okay. All right, Mr. Veerappan, we'll leave it on that note. Thank you very much for joining in and giving us some idea on the business. That's JK Paper. Slight sense of caution.